Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. And today, as always, looking at cash flow and cash flow through businesses. I'm joined on today's episode by my friend Ace Chapman. He's been on the show before. If you have not listened to any of the episodes that has been on, I would highly recommend it. Go to cashflowninja.com and just type in Ace Chapman, and you'll find the other episodes where Ace is just dropping value bombs during those episodes. Ace, welcome back to the show.
It's great to be back on. And, one of the things that your show stands out to me is that we get into some of the nitty gritty type things that I think on some of the podcasts where, I didn't realize this. Someone told me, it's like, man, you've been on over 100 podcasts. And in some of the cases, you've got a podcast interviewer who is a real professional podcast interviewer, but they're not out there doing deals and those kind of things. So the conversation ends up being kind of a bird's eye view. But I feel like when we get together, we get to get into the nitty gritty because you're out there doing these deals. I mean, we just spent the last 20 minutes talking about some of the deals that we're doing. So I love these conversations.
Yeah, same here, my friend. I love it. What's the saying? Like, we eat our own cooking and we don't throw up, right?
Exactly. Even on those tough deals, we stomach it and fight through it, right?
Absolutely. Now, for folks that are they're hearing your voice the first time, can you share a little bit about your background or journey with them?
Absolutely. So it all started, which is a little bit painful to say. It started 21 years ago. It's unbelievable that it's been that long. But I bought a business when I was 19, not through any kind of projection of my own of hey, I want to be a business buyer. It was just a situation that came up. I was a member of a stock market simulator. I was disappointed by how it was being run. I reached out to be a free intern for them just because I loved the business and wanted to help and figured I could learn something. And they reached back out and said, listen, we don't even want this business. We moved on to a project that's a lot bigger. That's why the sites always crash and we don't respond on customer service. The reason all of that is happening is because we've moved on to another deal. And they came back to me and said, listen, if you find somebody who wants to buy this business, let us know because we'd be interested in selling it. And, it all started there. I was bold enough to at least ask. I knew I was a broke college kid, had a few $1,000s in the bank, but we ended up structuring that deal where bought the business for $70,000. It was making about $60,000. And they were willing to finance half. I had a buddy that was willing to invest $15,000 who, had come from some money. And then I used some credit card debt, which is not something I recommend anybody does, but I used credit card debt to kind of meet the rest of that.
Yeah. You've got to start somehow, right?
Exactly.
Absolutely. And now you're building businesses, buying and selling businesses, buying businesses and holding on to them, traveling quite a bit. What beautiful paradise are you finding yourself in right now as we're speaking?
Yeah. So in the last 5 or 6 years, I've gotten interested and I just started to see, man, when you're buying businesses overseas, when you're investing in anything overseas, it's just a great rate of return compared to some of the opportunities, and especially not just overseas, it's in emerging markets. So you go to Europe, you're going to see similar opportunities to what we see in the US. But when you get into some of these emerging markets, right now I'm in Colombia. I'm looking at some neat opportunities down in Argentina. But you get into some of these other countries and the rate of return just is exponential compared to what we're used to seeing. And when you know how to structure the deal, a lot of those same principles are still the case. And so right now I am in Medellin. We were talking about a deal I recently did here on a really great hotel that's turned out over the last 6 months to exceed expectations. And so excited to do some other really cool things that are in the works and in the pipeline as far as investing in some businesses and different opportunities here.
Awesome. Yeah, and Medellin, I mean, I've heard a lot of great things about Colombia. So it's got a different, how can I say, when people think about Colombia, they think Pablo, right? They think Escobar, they think, because that's all you've seen on TV basically about it, right? Yeah. And it resurfaced again through the whole thing Narcos. On Netflix and Narcos, yeah, and so forth. But so much opportunity down there. Yeah. It's quite incredible. Maybe if you have some comments just on the opportunity down there in Colombia in general.
Yeah, I would. Number one, I was the same way. Before I came down to check out the deal, I'm like, okay, is this, what's going on? I remember putting up a post on my first trip, and my friends on Instagram were saying like, dude, don't get kidnapped. What are you doing? What are you thinking? Stay out of there. And I think there are two things. Number one is just a simple principle that I think most people think that they can do what everybody else does, and somehow, even given those ordinary things, end up with some extraordinary results. And even for me, I've had to have my paradigm shifted several times in my career, starting with that very first one, which was, when I bought that business and the income started coming in, it's like, nobody ever told me that I could buy income. Everybody was like, okay, this is the path. You have to go to school. You have to get get into a really great college, get a degree, go get a job, save. And then one day you'll be able to live financially free once you're 60. And so, that was a paradigm shift. And then coming here and starting to invest in Colombia, that was a paradigm shift. I remember a few years ago buying a business from a guy in Pakistan where, I got an amazing deal because nobody wants to deal with all of the headaches that you have to deal with the OFAC laws and banks. And it was quite the journey just to get this guy the money and close the deal to the point where, just as a side note of some of the things you deal with in some of these countries, we're buying an internet business. Not necessarily I would recommend doing an offline deal there, but buying an internet business from a kid and money that was going to change his whole family's trajectory for generations to come. And it, for us, wasn't a large amount. It's a $300,000 deal. But for him, I mean, that just is an incredible amount of money. And so we're trying to get the funds over to him. And at first, our bank just wouldn't send it. So we're getting all the verifications. We're showing, hey, we're real people. He's not a terrorist, So we get the funds sent. And his bank is like, no, this has to be a mistake. Like, this guy's a poor kid. Why is somebody sending you 300? There has to be something crazy going on here. And they sent the money back to us 3 times before we were able to just get him the money to close the deal. And also just you start to see, even in that case, because we were willing to deal with the headache, he basically, during the 4 or 5 months that we were dealing with it, was like, hey, you take the business. I know you've already put up the money. You can't get it to me. But, it's a kind of attitude that I think in these other emerging and countries where it's tougher to do business, there's such an appreciation that you don't see in the U.S., where, we really take for granted the opportunities and how easy it is to do business. I mean, we whine and cry about the most simple things. And that's been a really refreshing thing when you get into countries like Colombia. It's like, man, they just appreciate every single opportunity, whether it's a job, whether it's an investment, whether it's you just training and teaching them or giving them a different perspective. The level of appreciation and lack of that entitlement that we're seeing in the U.S. is just, man, it's refreshing.
Yeah.
and motivating for me.
The 1% grow their business and investments every year, regardless of the economy and marketplace, and pay very little or no taxes legally. Besides having the right mindset, elite strategies and tactics, and the counsel of elite wealth advisors, coaches, and mentors, they have access to opportunities that the rest of the population do not. If you're an accredited investor, we have a network that provides Cashflow Ninja listeners access to exclusive business and investment opportunities. To join our investors network, please apply at cashflowninjainvestorsnetwork.com. That's cashflowninjainvestorsnetwork.com. Yeah, absolutely. So I don't know if you want to jump into this a little bit of finding deals right now to areas that you guys are looking at. What are ways to find them? Because that's one of the big things, right, is deal flow.
Yep, it is. So, one of the things that we've shifted is the types of deals that we've been doing. It's become a lot easier to find those deals, is understanding the types of deals that you're going to do. So, for years, I have bought businesses, and it's been, just a really great journey. I've helped a lot of other people buy businesses, and a lot of the really great opportunities in that space during a time like this, where you have SBA financing and a lot of money that's floating around, the multiples can get a lot higher. And so what we've done is shift into the financing side of the business. And the cool thing is it's gotten a lot easier to find those deals. We were talking about before we jumped on the call, we were talking about the fact that, I've gone to a lot of countries, I've been in a lot of cities, and in every single one, there's one thing that's consistent. The biggest buildings in all of these cities are always the banks. Right up the street from me is a massive building that Bank of Colombia owns. And so, there's a reason that those institutions all over the world consistently make so much money. It's that financing, being kind of a financier, doing loans, doing investments. When it comes to the investment banks, it's the same thing. It's a very profitable place to play. And there's a reason that, we're not taught anything about that. We're taught that lending is risky. It's like, well, wait a minute. If lending is so risky, why are these banks making so much money? So we moved into that side of the business, and we're doing a lot of investments. We're still doing a lot of equity investments into deals. We're doing a lot of asset-based loans. We're doing some things like AR financing. And, what we're seeing is, when you're looking at a return and being able to get cash flow from these investments, the return has been incredible. And in a lot of cases, just as much income as buying the business. When you're talking about 35%, and if you can buy a business at a 3 multiple, getting a 35% return is, just as good with a lot less work, a lot less headache, and a lot less risk. Because if something happens to that business, we have assets, we have liens and things that we can go after. So it's lower risk, lower work, and more money. And, the frustrating thing for me was, how did I not see this earlier? So when it comes to finding the deals that we're doing now, a lot of the work has just been getting the word out and letting people know that, hey, we can we can either find the money if we don't have it. And so, the cool thing is everybody's facing the same issues when it comes to the cash that they have. It's basically like you've got this bucket and there's a hole. Like in all of our bank accounts, there is a hole, and the hole starts with inflation. So I think we take it for granted that, what you can buy for $1 just a couple years ago could have been bought with 2 cents in 1913. So you go back 100 years, literally 2 cents could buy what $1 could buy over the course of those 100 years. So it's literally just going down. So you are losing a ton of money when it's sitting in an account. So you've got that hole there. And then, we could save it for later, but you've got opportunity costs, you've got actual losses if you invest in the stock market. And so you've got these things that it's basically like a bucket, and you're putting money into this hole. And everybody's so focused on, as entrepreneurs, on making money, but you're putting it into a bucket that's losing money. And so a lot of our focus has been, how do we close that hole, first of all, and then turn that bucket into one where anytime we have something else that's making money and goes into that bucket, it becomes this magical bucket that turns that dollar into more money. And it's the magic of what Berkshire Hathaway has done and what Warren Buffett has done is it becomes this kind of snowball effect. It becomes this machine that every time he goes out and he finds a place to get another dollar, that dollar goes back and it's making more dollars. And then those dollars come and they're making more dollars. And it's this endless thing. So we're able to not only help a small business by going direct and investing in that small business, but we're able to kind of create that bucket. So now what we focus on doing is putting the word out, letting people know, hey, here is this really cool opportunity that we can help you, and you don't have to deal with the bank. And for other investors, it's, hey, we find a lot of opportunities out there, and the calling card has become, hey, we have money. Now, the places that we find those deals, it's, even when I get into a city like Medellin, finding the deal has become a lot more fun because I get to go to a chamber of commerce. I get to go to a co-working space and offer to speak. I get to connect with entrepreneurial groups and tell them, like, hey, like, I actually want to give your clients money. And then all of those people, I teach them what I'm looking for so that they're referring me deals that are in kind of the market that we want to go after.
My friend Brian Page has created a cash flow machine generating over $100,000 in 6 months without owning any real estate. His system consists out of renting properties from property owners and renting them out on Airbnb. His system is so simplistic, it can be managed by virtual assistants and yet so effective and powerful that it predictably generates cash flow every month. Brian and I are hosting a webinar where he shares his system and how it generated over $100,000 in 6 months for him personally. You can access this life-changing webinar at cashflowninja.com/BNB. This is one of the greatest cash flow opportunities I've seen since I've started my podcast. Again, the URL is cashflowninja.com/BNB. Well, I tell you, it's so exciting to speak with you again and to see this kind of business model, because this is something that, as you know, we talk about quite a bit, this concept of creating your own banking system. And there's so many different ways of how to do it. The concept of, of being the bank, right? Mm-hmm. Because banks know their return on equity. Right. They know that, if I have $1 million and I put, $800,000 out there that's earning me 10%, yeah, that's $80,000 a year. That's great. But what's the other $200,000 doing? Mm-hmm. What can I do more efficiently with that, where I park my cash to increase my rate of return on the overall portfolio, right? They know opportunity cost tying into that. What's the opportunity cost of that 200,000 just sitting there idly, just as you mentioned, just getting sucked away by inflation. And then the concept of dollar maximization, of just $1, just doing so many different things. So it's so exciting to see how, on the one side, you guys are still putting your feelers out there, looking at deals, buying equity, buying companies for cash flow, buying income. But on the other side, through asset-based lending, you're looking at, just as a bank would lend a business based on its receivables and the assets of the business, the bank would lend that business money, you guys are kind of incorporating that business model within your business as well.
Exactly. And it helps the acquisitions happen. So, one of the things that with my personal business model is as I started to do more deals, where we are right now, there are about 40 businesses in my portfolio, 38 to be exact. So obviously I can't run 38 businesses. So what I am is more of an advisor and an investor. And in those businesses, if I come in, I take an equity position. The other thing, we just did this, we bought a 3D animation company, and the company was doing, really well. But during the acquisition, it was like, all right, if we spend all the money, there won't be cash in the bank once we close. And, we want to have a little bit extra cash. And so I was able with some other investors to do a royalty financing. So I'm an equity investor, but I can spend my time trying to figure out, all right, what are the right financing structures or financings that you need to get access to for this business that will work well for the cash flow of the business. And, in addition to being an equity investor and it creates these other very cool things where now I've got that cash flow that's coming in on a consistent basis. I own some equity for the upside. There's dividends that come out for the equity as well. So there's almost diversification within each deal that we're doing. So just like you're talking about, whether it's equipment leasing, asset-based loans, factoring, you want to start looking at what are the opportunities within this business outside of what everybody is thinking about, which is either I'm going to own the business, I'm starting the business, or, I'm investing in the equity.
Yeah. It's very interesting stuff because it ties into the concept that, the price of the deal or the deal itself. Yeah, that's one thing. How it's structured and financed and the different diversification angles, maybe there's an equity piece, maybe there's a debt piece in it. That could really make your overall strategy that much more powerful and serves a little bit as some risk management.
Yeah, it does. It gives you diversification in how that money's coming in. And probably the most important thing is just the concept of, we were talking about this before we jumped on. When you go into a convenience store, you expect to pay a higher amount for that Snickers bar than you would if you go to Costco and you buy a box of them. And, it's very simple. Like you're going a little bit closer to the source. Now, if you had a connection with the Snickers manufacturer and you could just go straight to the Snickers manufacturer and pay the cost that Costco is paying, now you're paying even less. And so that's what we're trying to encourage people to do is, when it comes to our dollars and the investments that we make, we're taught, okay, find a financial advisor, which is essentially a salesperson. And, they're taught to sell the stuff. And behind them are all of these institutions that are making money off of that investment before you get your money. And so we're telling people like, that business that went to that investment bank and got them to take them public and, they make a big fee and now they go to their financial advisor and say, hey, we're going to give you commission if you can convince this person to buy that. And now they're getting a fee. And then you got to hope because, somebody has to buy this from you. You got to hope that they're willing to pay more so that you can make money. It's like, instead of all of that, there's a business right down the street. Or there's a business that you can go and get in a crazy return that's in the emerging market. And you can go direct, and that's what shifts that return from being that measly 5, 6, 7%, which after inflation still goes down to a measly 3%. You can end up with a 25%, 30%, and it just makes such a huge difference that it's funny. For me, it's almost like propaganda. How convinced people are that it's too risky for them to do that directly. Like it's almost shocking. It's like, okay, again, like we see banks do this every day. Goldman Sachs is an investment bank we associate investment with risk. Like we're told by the financial advisor, like, hey, you have to take this risk if you want to make money. Well, why has Goldman Sachs made money like every quarter for forever? how have they managed to do that? If, this is a risk thing, you're going to make money, you're going to lose money. In 100 years, they've had like 2 quarters where they lost money. Like that's not, I want to be on that 98% win rate. So it's leveraging those strategies and trying to go as direct as possible and to stop buying your investments from the convenience store. And it is convenient. That's why they're you got to do some more work to go this other route. But that convenience comes at a huge, huge cost.
That's exactly what I say to folks too. It's hard work. It's, wealth, building your own wealth. I think is it Henry Ford that had a quote, and my audience know I butcher quotes a lot, but it's essentially that, if you're working too hard, you don't have enough time to make money, right? Exactly. If you spend too much time working, you're not going to have enough time to make money. And it's a different kind of skill set with it too. And to your point, you can study what these people do. You can study what Berkshire Hathaway does and Warren Buffett and his team. You could study what Goldman does. You can study what banks do, which is just fascinating because they figure it out. And even insurance companies, you can figure out, some of the principles and strategies that these guys have and implement it within your own business and in your own wealth creation system, rather than just handing over your cash to someone else because they've convinced you that they know more than you do, or they know what's best for you, right?
Yeah. It was incredible for me to learn. I'd started doing some accounts receivable financing, and, we're throwing out a lot of terms and things. And I think that's one of the things that intimidates people. Mm-hmm. But, I just as a side note, I think it's important to note that it is that intimidation that makes this such a great opportunity. It's the fact that every other average person that thinks, oh, like the stock market, that's something that I can do, or real estate, that's something that I can do. But accounts receivable financing, that's like, what is that? Like, I can't do that. That is why the opportunity exists. And, it's really interesting for me. I kind of had happened into that because I bought a business where I saw what they were paying. They were paying 30% a year to this accounts receivable fund. I'm like, man, like this is craziness. And so after I bought that business, we stopped doing that, and I started doing it for some other people in the industry. And so it was cool to start reading the Goldman Sachs story and realize like that's really how that whole thing started. Like they were just doing accounts receivable financing and making it easy for folks and turned into the ginormous monster that it is today. So I think that's a big part of this, is just realizing it's easier once you get over the hump and knowledge barrier, just because there is no competition. You know what I mean?
MC Lobshier, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com. And it's also just trying to figure out what you have that you can use and leverage to then start the process, right? Great book, The Mystery of Capital, is a great read, basically. And essentially, one of the central themes of that book is what capital is and how capital can be used, and why capitalism has been so successful in the West, because you can literally take an asset, collateralize that asset, extract capital from that asset to acquire another asset, right? Just is this an example, a business, a guy that or a gal that starts a business and does well can then take the numbers of that business, the receivables and the assets of that business, to get more capital, to expand their business, to hire more people, purchase more inventory and products, and sell more and scale and so forth. The same with in the West, everybody knows that they, with a house, HELOC is a very good example of that. And we talk about different other ways to do it besides a business line of credit and HELOCs and, policy loans from high cash value life insurance, and so forth.
Yeah.
So that's the central theme of this is, understanding how you can collateralize assets, and you can be the person on the other side that has something placed as collateral from, let's just say, a business, and you could be the lender in that case.
Exactly.
Which is so powerful. If you don't mind, talk to us a little bit about some of because a big part of your business is finding other businesses to purchase, negotiating a little bit the deal, structuring the deal, doing your due diligence, and then figuring out ways to raise capital to close that deal. If you could share with folks a little bit about just a cycle of how that operates and works within your world.
Yeah. To even piggyback, talking about negotiating, then moving to deal structuring, to moving to raising capital, a little bit of it still even ties into what you were just saying, which is, it becomes easier to do deals when you understand the difference between what can be an asset and a liability. And this was one of those things that was a huge paradigm shift for me when I realized, oh, wait, I remember buying a mortgage company, and it's been probably 14 years ago. And, realizing like, okay, for a bank, our loans are their assets. And then they can go and borrow against those loans to do another one. And so, when we're doing deals and I'm trying to negotiate, I'm trying to do a deal structure, I see that as a potential asset. That note becomes, as soon as you do a note, that becomes an asset. It's funny. I know we're squeezing a lot into a little bit of time, but I think one of the mistakes that people make is thinking that some small amount of money isn't enough to start thinking this way or start leveraging these strategies. And, there are 2 points that you want to consider, because I think, even when I talk about negotiating and deal structuring, I think people that may have $5,000 in the bank are like, okay, that doesn't apply to me. Like, what can I get out of this? But, there are a couple things about that. Number one, when I go to these other countries and realize like, man, people would kill to be able to save and get $5,000 in the bank. And so not taking that for granted and treating that like the true asset that it is crucial. And the other part of that is, I'm just a believer that however you treat that few $100s is also how you're going to treat the $1 million. And so you want to start building those skill sets. And so when I'm putting together deals now, and this will differ from when we talked before, is I'm looking at all of the potential assets that come to play in that business on both ends. So if I'm selling a business, now I'm happy to have a note. And now when I sell that business and I create a note with that seller, I've got an asset that I can go and collateralize and borrow against. I'm able to sell that seller on that now. And there are just so many deals that are I wish I could go back and talk about from this new perspective. And the new perspective, it took me 21 years to kind of get. And so, right now we're trying to sum it up in 30 minutes. But, from that new perspective, when I'm talking to that seller of business that I'm buying, I'm able to train them and teach them that, hey, get excited to loan me money. Get excited to have a deal where you don't get all of the cash up front, because this is still going to be an asset. It's going to pay you. You're going to make more money than you would if you take this money, if you took the cash, just like we talked about, and you like, tell me about your bucket and let me show you that you've got a hole in that bucket. And so what you're saying is you want to take some cash and let it start and put it into, just like pouring the water in, you want to pour this water in and let it start leaking out the bottom immediately. So let me show you how, instead of getting that, this is a better bucket. This loan creates a bucket that's making more money for you and that can be leveraged to do even other deals that you want to do. So now you can collateralize that and borrow against this note that you have to go out and do another deal. And so, it's one of the reasons I want to talk about negotiating. This is such a powerful perspective because it kind of flows into everything. When you're talking about doing the deal structure, it helps to get the deal structure that you need, and then you get creative. Because now that I'm working with investors, I talked about the royalty deal on the 3D animation studio that we just bought. When I'm doing royalty deals on other businesses, I get to interact with other investors. And so my portion of that investment is smaller. But because I found the deal, cash wise, because I'm dealing with a couple guys that have a lot more money than I do. And so I've got a smaller portion, but I found the deal. I'm putting together the structure. They don't like having holes in their bucket. That's one of the things you realize about wealthy people is they got that way. And that's why I tell people, if you got $100, it's even more important that you think like this and start treating that $100 like this. Then the person's got $1 million. They're already there.
Yep. So
you're the person that needs to start thinking like this. Not, once I get millions, I'm going to start thinking about this. It's hilarious that's how we're taught to think. Like, once you get rich, figure out all these complicated things.
Right. Yeah, it's so true.
So when it comes to the deal structure, I'm able to do it with that perspective. And then that last part, when it comes to raising capital, it becomes really, really cool when you're taking other people's deals to investors and saying, hey, this is a really cool deal. I understand how to structure this. Here's how we can get a return. Here's how we're going to be protected. Here's the upside. And you come to the table with that deal, you can still earn a great return. That's going to be a lot more just because you brought the deal to the table. And then even when you're going to do your own acquisition or you're raising capital, they're like, hey, I know this guy knows his stuff. Like, of course, if you get into trouble, you're going to be able to figure out 3 ways to get out of it. So it becomes a lot easier to pull that off. And then the last piece, closing the deal, and in a case where you may be operating a business, when you've got these tools at your disposal and you're learning how all of this stuff works. When you get into trouble, you've got a huge leg up on the average entrepreneur that, they're an expert at Facebook marketing. They're an expert at hiring. They're an expert at, operations and training and management. But when it comes to thinking like a deal maker, thinking like a financier, it's funny because this whole thing, there's not even a lot of words to use to describe it because it's not in our wheelhouse. Like everybody, you go into a party, you ask somebody, do you know somebody that invests in real estate? And it's, yeah, I know plenty of people that invest in real estate. You ask somebody, somebody that trades stock. I know a lot of folks. And then you ask them like, hey, you know anybody that does things like a bank? It's like, what? Like, what are you talking about? Like, there's not even, the old school word is financier. And so I use that, but it's just being able to look at any business, look at any situation and see all the opportunities that exist to bring tools that are out there, like, we've discussed, whether it is AR financing, asset-based lending, equipment. I mean, we have a list of about 100 different types of financing that exists, and down to a deal. I just financed some vans for a plumber and got some equity on top because he needed the vans. He's already doubled the business. I've got an amazing interest rate plus a equity kicker, plus the vans to back the whole deal. And so just some really fun, creative things that can be done that even if you're an entrepreneur, you want to understand this stuff before you get into situations. because you're going to be able to dig the business out of any trouble that you get in, leveraging some of these tools.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. What are some of the things that you're doing from a due diligence perspective on niches? And because, I was thinking before our call today, I'm like, I got to ask Ace this, because you just look at certain business niches and then you're like, man, there's so much disruption. And these days it's coming from outside of the business too, right? Like Tesla is a good example, battery company, basically. That's their, it's really a battery company that's disrupting, the automobile, or will disrupt the automobile industry. And I guess you can argue that Uber and Airbnb they're not, a cab company or they're more of a technology company, right?
Yeah.
So what are some of the things that you look at from a due diligence risk management perspective, if you're just looking at industries and looking at different types of businesses?
Yeah, I mean, it's changing all the way around. At the World Economic Forum, they were talking about the fact that, these last 10 years have been really, really good, but we're basically at a peak for everything almost. It's like the peak of everything. Oil is most likely just never going to be more used, more valuable than it is right now. And so when you look at the slow destruction, it won't be instant. And I think that's what people get confused. It's like, gas cars aren't going away. It's like, yeah, but a 1% decrease a year over the next 10 years is huge for that. You're talking trillions of dollars. And in each one of these industries, automobiles is another one that you mentioned. It's because of Tesla, but it's also because of, I'm in Colombia right now, like we mentioned, and there are 10 different companies like Uber. And so, you look at the convenience of being able to call up a car. People don't need that in America. In addition to that, everybody's moving back to cities over the suburbs. And so, people just don't need cars as much as they did in the past and don't want them. This is the first time that, teenagers in droves are just like, I don't want a car. Car was the biggest thing, you dreamed of as a kid before. And now kids are like, man, just give me some Uber credit. Give me a ton of Uber credit so I can go wherever I want and be driven there by basically a chauffeur. Why would I want to get a car? That's crazy. It was the first time that millennials don't want to buy a house. So all of these things are basically at peak. And it's slowly going down on the other side. And, while that's going to create a lot of destruction, I think it's creating a ton of opportunity. And, one of the opportunities is in this kind of financing arena. I think it's more dangerous to start a business today just because the changes are so massive. I look at, businesses like FBA, businesses built on Amazon. I knew a business that was doing $12 million a year that Amazon made some changes, decided to create a similar product and sell it for themselves. And what do you think is going to come up before your product? It's going to be Amazon's version that's going to take a lot of your business. So, those kind of things, it creates a lot of risk. But when you're diversified, and it's one of the reasons that I have 38 companies is that diversification, and then within those companies, I want diversification. I think that that's the only way that you can combat it, because you're going to have some of those companies that grow, and benefit from it. You know, I've had companies that triple in a year and that kind of thing. And then you have other ones that essentially go away and disappear. And the only way to protect yourself is to diversify. And the downside, you know, I've always kind of preached that most people shouldn't be entrepreneurs, but they can definitely take over a business that's working. But the downside now to being an entrepreneur is that you could pour your time into something that you just can't get back. It's one thing to lose some money, but to pour a ton of time into something when you could be gaining a skill set like some of the things that we're talking about here, and lose that because there's a shift in the market. That's the real danger. So I think that's one part, and then the other part of due diligence outside of diversification is really deal structure. You know, when I talk about that plumbing deal, it's you know, you're doing the normal due diligence things, and you know, I think that's really important. But I learned in training other clients that the best way to get good at due diligence is to do deals. I've tried to teach people how to do due diligence. And, you know, you can have a checklist and that kind of thing, but due diligence is an art. It's just not, if it were a science and you could say, here, check off this, check off that, check off that, then everybody would, and then if you check off these things, your deal is going to work. That list would be gold. Everybody would follow that list and every deal would work as long as you followed that list. But it doesn't work that way. It's much more of an art than it is a science. And so you have to go out and do it in order to gain that knowledge. But, you know, it comes down to those three things when I think about due diligence. You've got to diversify, which that's the real protection. You've got to do the right deal structure, which that's the next layer of protection. And then the third level of protection is the actual due diligence, which you're going to get best at that by going out and doing deals and protecting yourself during those deals with the first two.
Yeah, absolutely. And then also look at certain things that will be around, right? I'm just thinking, I know you and I probably I talked a little bit about it in previous interviews, but like the children market, you know, I've got 2 young kids. I know the amount of money people spend on children and things for children, right? And, you know, weddings is another one. Then obviously the life cycle of you know, funerals. Yeah. So, I mean, we're born, we grow up, we get married, we have families, and then we pass on, right? And then the plumbing example is a great example because I just think about that as a niche right now. Man, it is a great business to be in because there's a lot of cities with aging infrastructure, right?
Yeah, it is. I mean, it's not going away. You know,
right.
No matter, we're definitely not at the point where we're going to stop pooping.
Right. No, and we're just not going to let pipes.
There's a lot of inventions going on, and we want that to work.
Yeah, exactly. We're just not going to leave the pipes like the aqueducts, like the Roman aqueducts, which some of them are still running, by the way.
Yeah, you know? They are, which is unreal.
Yeah. So it's very interesting. So if you're listening to this, think of things similar to that. Those are just pieces of low-hanging fruit that I was picking up. But there's definitely a lot of great opportunities and industries and niches that might not be as open to disruption yet. There's obviously things to do inside of them within those niches, but they're not going away soon. So this has been great, Ace. Always enjoy our conversations. Where can listeners learn more about you, what you do, all of the things that you're involved in, where can they touch base with you?
Yeah, man, I feel like we're slowly chipping the tip of the iceberg. You know, we always get into some good stuff here. So feel free to reach out to me. We are going to make something available to your listeners. If they want to email me, ace@acechapman.com, and request the secret recording. Just put that in your title. We did a training and a question answer kind of interview for a high-end, pretty expensive coaching mastermind. And, it's not anything that's made public, but we'll give you your listeners and subscribers free access. So if they send an email, ace@acechapman.com, in the subject line, just put secret recording, and we'll send them the link to that. Outside of that, feel free to check out YouTube. You can search Ace Chapman, and Instagram, I'm ace.chapman.
Awesome. Well, always a pleasure to speak with you, my friend. Thank you so much for coming on the show and sharing your knowledge and your journey, and enjoy your time down there in Medellin.
I appreciate it. Talk soon.
All right, buddy. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.